So welcome, this is lecture 1 of cost accounting, and we are starting with study note 1, which is introduction to cost accounting. And this is for CMA Intermediate June 2023 attempt. Okay, so now cost accounting is the fourth subject of your group 1. Okay, and then it will give you some help in your CMA FM as well. First of all, in group 1, okay, it is 100 marks, right? And in group 2, you have got CMA FM. In that, you have got CMA part of 50 marks, correct? So in that, it will help you to the extent of 25 marks. So which is why, especially if you are giving both groups, it is good value for money. Okay, so you can basically, you're studying for 100 marks, but you are getting 125 marks. So which is why it's a good subject that way. Okay, good value for time. Right, so I'll just tell, and it is a good subject that way, it is interesting. So mixture of theory and practicals. Okay, theory and practicals. Theory sometime you might find boring, but theory is very useful, not just from exam point of view, from your life point of view also. This theory will be very useful. The better you understand this theory, the more will be your quality as a cost accountant, as we are going to be CMAs, correct? Cost and Management Accountants. So basically our core subject is cost accounting. This is your core subject. Okay. So, but because you are going to be a cost and management accountant, okay, and in management accounting, you will need knowledge of cost accounting, okay, and you will need management accounting knowledge. Okay, you will need financial accounting, and you will need taxation and law also. Okay, so which is why, when we are so although we say that cost is our key subject, okay, but along with that, there is, you will have to have good knowledge of these other subjects also. Okay, so in a business standpoint, when you talk from a business point of view, you cannot say only cost. Okay, you'll have to, you should have a mixture of knowledge of all of these things plus law. Okay, business law is also important, right? So although you will be having for law, you will be having company secretaries, okay, but if you want to discuss something with him, you should have some basic knowledge of law. Okay, so similarly for taxation, you might have some consultants who will be chartered accountants, but to judge whether they are, doing their work properly or not, you should have a fair knowledge of taxation, right? And financial accounting is everywhere, isn't it? And management accounting and cost accounting is your core area. Okay, so this is the main thing. So I'll tell you how the subject is distributed. So first of all, as I told you, it gives you good value for time. Study for 100 marks and you are getting 125 marks out of it. So now if I take you to the study material, okay, now this is how your subjects are divided. Okay, so here, this is your first unit. This is your first unit, which is of 40 marks. Okay, it is by far the largest. It's very large. The other two are 30 marks, but these are small. You can even say that these two together is equal to the first unit. Okay, and these two, the one I have highlighted in gray, it is more interesting also because there are lots of problems in these. It is more interesting, but this red block is also very important from the point of view of understanding cost accounting. Okay, right? So how we will be doing this is, I'll show you. We're going to start with chapter 1. It is fully theory. which we'll do today. Okay, so might be a little boring, but we'll start with introduction to cost accounting. Okay, this is what we'll be doing first. After this, you have got material, employee costs, material costs, employee costs, and overheads. Okay, direct expenses is just a very small part. Okay, these will be so these chapters are all large chapters: material, employee costs, and overheads. Okay, so we are not going to go chronologically, right? Because reason being, just to keep you interested also, I'll just be mixing some parts which might be a bit boring with some interesting part. Okay. So here, after chapter 1, introduction to cost accounting, okay, this will need about 2 lectures for these. Okay, today's and tomorrow's. So this will be over chapter 1, but we have to start with chapter 1. Only then you will get that basic hang of the subject. Okay. So after doing this, we will not go for material cost. Again, it has got too much of theory. Okay, it has practical problems as well, but it has got too much of theory. So after this theory, this is 100% theory. After this, we might not go to material cost directly. Okay, so I will take you to cost accounting techniques, marginal costing after this. Okay, so in cost accounting techniques, we have got 3 subjects. Hello, Sanjana. We have just started. Okay. I'm just giving some basic about this subject, cost accounting. So now, if I show you these methods of costing, okay. So in your first unit, after your material, labor, overheads, you have cost accounting standards. Okay. And then cost bookkeeping, which is also very important. Okay. But then all these together, so if at all there is a chance that you can leave something, it will be in first unit. Okay, so we'll go for the next 2 units fully, and we will complete even unit 1 fully. I'm talking from your point of view. Okay, if at all you are lagging towards the end, towards the last month, and something can be left without hurting you too much, it will be from unit 1. Okay, so cost bookkeeping, and after that, now we are going to have the second unit, which is methods of costing. Okay, so here you can see you have job costing, batch costing, contract costing, process costing, and operating costing. Okay, these are the things we are going to do in the second unit. Okay, again, we'll not do the whole thing together. Okay, so we'll just mix these 2 units with your unit 1. Right, and then last one is your last unit is techniques, cost accounting techniques. Okay, so here so next chapter we are going to start is marginal costing. It is very, very interesting. Okay, and it will keep you interested. Okay, after marginal costing, we'll probably move back to the first unit. We'll try to do material after that. Okay, so this is how we're going to go. We'll mix and match basically. Okay, so marginal costing, next is standard costing in cost accounting techniques, and budgetary control. Okay, now these are the 3 things which are there in your CMA FM also. So these 3 are there in CMA FM as well. So basically in CMA FM, these things are there fully as it is, plus they have something more. Okay, they will have little more than what you have. For example, in standard costing, you have material and labor variances. They, apart from that, will also have some more variances apart from that. Okay, so fixed overhead variances and all that, they will have that also. Okay, budget and budgetary control is exactly the same for both, no change. Okay, and in marginal costing also you have got a transfer pricing part which they will have apart from this. Okay, so needless to say that when we do anything from these cost accounting techniques, your group 2 CMA students will also sit with you. Okay, so this is how the things will go, right? So now we'll go back. So we're going to start with chapter 1. As and how cost accounting goes up, it will just take a while to build up. Okay, this subject is such that it will build up gradually, but once it builds up, it will get more and more interesting. Okay, and here one good thing is in cost accounting, problems are not very large, so chances of accuracy are much more, okay, than financial accounting. So basically, in your group 1, if there is any subject which is the most scoring, that is this subject, cost accounting. Okay, so which is why I would suggest you all to go for 100% learning in this subject. Okay, because 100% learning, reason being, it will give you good marks. It can give you very high marks. It can give you 80, 85 like that also. Okay, and once you score well in one of these subjects, sorry, in cost accounting rather, okay, it is as good as you have passed the group. You can get as good as say 30 marks extra, okay, which means for the other 3 subjects you need only 40, isn't it? So this is one thing why you should do it fully. Secondly, another thing is this is your core subject, correct? This is your core subject, so which is why do well, because see, tomorrow when you become cost accountants, okay, you will stand and say in a group of 100 cost accountants, okay, and we want to stand in the top 50 in that also, correct? We don't want to be in bottom 50, which is why as and now you study, build your concepts well. Okay, we'll try our best to give you good concepts, not just from an examination point of view, but also core concepts. Okay, so okay, so now I think we can start cost accounting. So you all know that there are 3 main branches of cost accounting, correct? Of accounting, right? Financial accounting, cost accounting, and management accounting. Okay, there are basically these 3 main branches of accounting. Okay, so in financial accounting, what you mainly do is, okay, you will just see how your assets and liabilities stand in balance sheet. Okay, and the assets and liabilities, the net of that which you have invested, okay, that will be used for your business and that will yield you profit. Okay, so financial accounting will basically talk about your balance sheet and how you can get your profit. At the same time, once you get your profit, you have to file tax returns and all that, right? All these things. So along with financial accounting, your taxation will also be a part. Okay, it goes hand in hand with your financial accounting, because once you get profit, okay, you will have to file tax returns as well. But this is the main function of financial accounting. Cost accounting's main thrust is how to reduce cost. Okay, we will see why it is important, right? It will, here the thrust is how to reduce cost. The management accounting will use both, okay, for multiple decisions. It can have many decisions in a month, okay, multiple decisions in a month and in a year. So for each decisions, it will use data from cost accounting as well as financial accounting. Okay, so as of now we go ahead, we will build up more on relationship between these 3. Okay, fine. So now, first thing is Luca Pacioli. Have you all heard his name? Luca Pacioli? No? So Luca Pacioli is the person who has found the double entry system of accounting. And whatever we do now is based on this double entry system. Okay. There are some entries which are done in cost accounting also. That is also based on double entry system. Financial accounting runs on a double entry system of accounting. Okay. That was founded by Luca Pacioli. So you will find his name in auditing also, which is why. Okay. So in 15th century, he found the double entry system of accounting. Okay. So 15th century means you will have in 1400s. Okay. 1400 will be 14th century. Okay. 1400 is 14th century. But 1401 comes in 15th century. Okay. That is after 1400. Correct. So 1401 onwards. Okay. To 1500 will be your 15th century. Okay. The next 100 years from 1400 is going to be your 15th century. So which is why whenever you see 15th century, remember that year will start from 14. Okay. So now, so he first founded the double entry system of accounting. Okay. Then double entry system of accounting spread in England and US. Okay. So it spread up to the 20th century. Okay. The 20th century will be 1900s. Okay. Whatever is in 1900s, that will be the 20th century. Okay. Fine. So 1990, 1980, they are all in 20th century. Fine. So now, so later on, the double entry system spread throughout the world. Now, again, from 1880 to 1925. Okay. AD means whatever comes after BC, that is AD. So basically, where I'm saying 1494 year, it is 1494 AD only basically. Okay. All our years are AD, right? So from 1880 to 1925, 1880 to 1925, okay, what happened is there were many complex product designs and complex corporations like DuPont, General Motors. These all came from in this period, 1880 to 1925. Okay. So industrial revolution happened in the 18th century. So when we call, say, industrial revolution, okay, industrial revolution happened in the 18th century, started in the 18th century. Okay. So it continued for close to a century. Industrial revolution. So in industrial revolution, what happened? Earlier, everything was manually done. Okay. And in industrial revolution, factories got established where things were being produced together. Okay. Many units together. So that was the time when industries grew. And that time is called as industrial revolution. So industrial revolution is not about any war or anything like the other revolutions. Okay. It is about growth of industries. Okay. And automated way of manufacturing. Okay. Manufacturing many things together. That coincides with your industrial revolution. So this was 18th century. Started. Okay. Why we are saying started? Because it went on for a century. It was a long period. Fine. So now this period is after the 18th century. So that's why it's post-industrial revolution. So there were many complex product design, and even more development than the industrial revolution happened. And we had organizations which were doing many different things. Earlier, say, cement manufacturer will be manufacturing cement only. Okay. But what happened now is, like in this period, you had corporations who themselves had many diversified businesses. Okay. Some businesses had no relation with that of other businesses. Understood? Okay. Fine. And during this period, what happened? Scientific management was developed. Okay. So who is called as father of scientific management? Who is father of scientific management? Taylor. Okay. Frederick Taylor. Okay. Frederick Taylor is called as father of scientific management. Okay. So scientific management developed where you had uh, different ways of paying bonus, calculation of bonus and all that. Okay. Management of that type, right? To convert physical standards into cost standards. Okay. So earlier, what happened is people used to think about physical standards, how many units to manufacture and all that. Okay. Physical standards. Now there are cost standards, like I have to manufacture these many units in this much cost. Okay. Cost standards took over, right? And so when cost has come in variance analysis, control, okay, these things came over. Okay. So basically variance analysis is nothing where if you think that say cost should have been 80, but the cost is 90, there is a variance. Okay. So you will analyze that variance on why it was more. Okay. Fine. Then during World War I and II, social importance of cost accounting grew due to increase in defense expenditure, because this was World War period. What happened is defense expenditure grew. Okay. Why it grew is because there were no competitive markets, okay, for purchase of war products, right? So government had to manufacture it on their own during the war period, right? Because the markets were not all open during that time. So they placed cost plus contracts. Reason being, see, if you have got for some markets, for example, okay, take this. If government wants to buy a tank, okay, if government wants to buy what? Wants to buy a tank. The rate is 10 crore. English tanks are 10 crores. If you buy Russian tanks, it is 8 crores. Then you can go for Russian tanks, correct? If there is a market. But there is no market now. Okay, you cannot buy from any market at this point of time. So there's only one way if you want to construct, right? So if you want to construct a tank, then you will have to buy all materials, correct? So then best way would be to ask the contractor to buy all materials. Okay, they will buy all materials and then in the end give him a profit percentage. Say all materials is for 100 and tell him that we will give you a percentage of 10%. Okay, whatever is the cost, it will be 10%. So basically, at that point of time, they had no other choice but to go for cost plus contract. This is called as cost plus contract, where the cost will be collected and the contractor will be given a percentage on the cost. Okay. So there was no choice because they did not have the choice of markets at that point of time. Fine. So which is why the importance further grew of cost accounting. We're gradually seeing like how cost accounting grew, because in the industrial revolution, what happened? You are manufacturing many things together. So which is why your cost of production reduced. Okay. So the emphasis on cost has started mostly from your industrial revolution. Okay. Right. So this is our main introduction, you can say, about cost accounting. Okay. In cost accounting, basically what we do is we find the cost of a product and we try to minimize it. Okay. So now let's say need for cost accounting. So what is the need for cost accounting? Why cost accounting? Right. First thing is it came into picture because of limitations of financial accounting. Now financial accounting in financial accounting, you could not concentrate or focus too much on cost aspect. Correct? It was more about, see, in financial accounting, it was like buy raw materials. If you're buying material, let us say for 1,000, and you're selling it for 1,200. This was the main emphasis in financial accounting. Cost will see what you can do, how you can work with this 1,000. Okay, how you can reduce this, right? So basically, if you have a chance of increasing this 1,200 can become 1,300 or can become 1,400, right? So you have chance to increase this, then even if you don't pay too much of attention in cost, that is okay. But now what happened is you have so many competitors, so many people, right? So if you raise your product, leave from 1,200 to 1,300. From 1,200, you cannot even increase to 1,220. And even then, in such a small increase, people can go to other competitors. So when you cannot reduce this, okay, you you cannot increase this, right? When you cannot increase this, you have got only one choice but to reduce this. Correct? So which is why when competition became more and more, importance of cost accounting became more and more. Okay, fine. So you needed cost accounting because of limitations of financial accounting. Improved cost consciousness. Okay, why cost consciousness improved? Because as and how mechanized production happened and market started expanding, okay, they had to improve their cost consciousness because they could not work with their selling price anymore. Okay, so rapid industrial development, okay, and growing competition amongst manufacturers, correct? Galloping price rise. The price rise was too much. Okay, so because of price rise, that is inflation. Okay, that started increasing, and to control inflation, governments needed to know the exact cost of production of things to really find out if someone is charging exorbitant price. Okay, fine. And then last point is it is an addition of this point. There are many legislations which were passed, like Essential Commodities Act, Industrial Development and Regulation Act. Many such acts were passed. Okay, because of the main purpose of this was to know the exact manufacturing cost. For example, in Essential Commodities Act, government wanted that essential commodities must be supplied at a very low price. So how to understand whether they are supplying at a low price or not? First have to know their cost of production, correct? Because of these things, they again needed to know the cost. So that is the thing, need for cost accounting. See, all these are questions, okay? Any of this can come for 4 marks easily, okay? So you should, as and how we complete it, you also go on completing these things. These are all very, very simple also, correct? You can just remember it based on what we have discussed, right? The need for cost accounting. This is one question. And now here, financial accounting and management accounting. So we are basically trying to compare financial accounting with management accounting. Now, our Cost and Works Accountant Act was enacted in 1959. This you should all know. Okay, right? So because this is our parent act, the course which you are doing, okay, the profession which you have chosen. So this is the parent act for that, Cost and Works Accountants of India Act 1959. Okay, so you should be knowing this, right? So what was established? First, it was called as Cost and Works Accountants of India. Like I know it, like you have all joined very recently, so you would not be knowing this name, but long back, like 20 years back, uh, your Institute of Cost Accountants of India was known as Cost and Works Accountants of India. Okay, ICWAI, it was known like that. Okay, so now it is ICAI, as you know, Institute of Cost Accountants of India. Okay, so wherever you write ICAI, okay, as you all know that Chartered Accountant Institute is also ICAI, correct? You know that? ICAI is Chartered Accountants Institute also. So whenever you want to name CMA Institute, just say ICAI CMA. Okay, right? Just put this in the bracket. Okay, so it will be more clearer. Fine. So what are we seeing here? Financial accounting and management accounting. Okay, the first thing is uh, the act was passed in 1959, and where was the head office? It was Kolkata. Okay, earlier also it was Kolkata, now also it is Kolkata. Okay, so established in Kolkata. Okay, this is the first thing, the first important thing in India. Okay, in India. So worldwide, we have already studied what we studied earlier on. Okay, we talked about industrial revolution. Okay, Luca Pacioli. That is all worldwide how it came. Okay, so now we are talking about its growth in India. So basically, first thing officially when your act, the Cost and Works Accountants of India Act 1959 was passed. Okay, that's the first thing, right? After that, second major thing which happened was, okay, it is cost audit was introduced in Companies Act 1956 in 1968. When cost audit was introduced in Companies Act, that means cost accountants got an official relevance. Okay, for cost audit could be done only by cost accountants. So cost accountants got an official recognition here in 1968. Okay, and now cost audit is under section 148 of the Companies Act. Okay, there are four kinds of audits with Companies Act talks about. Okay, and cost audit is section 148 of the Companies Act 2013. Okay, right? So now, okay, so this is the thing, and so not much has been, although the heading is financial accounting and management accounting, not much has been talked about it. We will talk about it little later. Okay. All three, we'll compare all three. Now, in costing, okay, you've got three main terminology which is used. Okay. Cost accounting, costing, and cost accountancy. Now, practically when you work, okay, when you become a cost accountant, you'll go for audits, and when you work practically, okay, these three will be used interchangeably, to be very honest. Okay, your costing will mean cost accountancy. Okay, cost accounting will mean costing. Okay, it will be interchangeable. So here we are just seeing uh, the real meaning, kind of we can see the theoretical meaning of these three words. Theoretically, how they are different, that we are seeing, but practically speaking, it will be used interchangeably. Okay, wherever uh, you would have seen that many people say that costing exam, right? I have exam of costing, or cost accounting they call costing, right? Cost accountancy is barely used, correct? Use cost accounting and costing normally, right? So we'll see what actually is the uh, difference between this. Definitely all three are related, which is why we use them interchangeably, correct? So but now just for your knowledge, and this one question, right, it comes in exam somehow from a theoretical point of view. What is the difference between costing and cost accounting? These things, it comes. Okay, so that way it is relevant from your exam point of view. Okay, so now what is, let's start with cost accounting. Okay, so cost accounting, so accounting for cost classification and analysis of expenditure. Okay, the first thing is cost classification. So you'll classify which it between expenses. Okay, right? So you're say classifying it You're classifying it, let us say, as a service expenditure, or you have bought some goods. Okay, so that is cost classification, where you can find out the difference between two things. And even of the same nature, you will classify it into different heads. For example, service also, you're taking two different kinds of service that will be further classified. Okay, the more you classify it, the more will be the chance of improving upon it. That is, you can kind of make it cheaper. Okay, so you have to have good good quality classification. Now, cost classification and analysis of expenditure that will enable the total cost of any particular unit of production to be ascertained. So classification and analysis of expenditure to get the total and per unit cost of production. Okay, that is your cost accounting. And at the same time, to disclose how such total is constituted. So basically, in cost accounting, what I'm saying is, if I'm making any, say, account of expenditure, okay, I am classifying, say, petrol cost says, okay, petrol, okay, diesel, okay, then services, whatever. I'm classifying all my expenses into many heads. And then what is happening next is, I'm able to get a total cost. Okay, I'm able to get a total cost, and I know how many units I have produced. Okay, so I'll divide, say it is 100 units I have produced. Okay, so I divide this total cost by 100, and I will get per unit cost, right? So this thing what I've shown you now here, this is cost accounting. Okay, just list clearly all various categories of expenses, total it, divide by units. Okay, you will get per unit cost and total cost. This is nothing but cost accounting. Okay, fine. So cost accounting is classifying, recording, and appropriate allocation of expenditure. So just any one thing you can remember, that is fine. Okay, if you are remembering this, then you need not remember this. It's one and the same, mentioned in a different way. Okay, cost accounting is classifying, recording, and appropriate allocation of expenditure. Okay, there what we did, we classified whether it is petrol or diesel, then we recorded. Okay, and then we allocated, like there are many cost centers and all. So you allocate expenditure to the relevant cost center. Okay, what is cost center now? We will see. Okay, it's too early now. Allocation of expenditure for determination of the cost of products or services, for the presentation of suitably arranged data for controls. Okay, so if you have understood this, then you need not go for this. Okay, it's basically presented in another way. Now, cost accounting can be explained as follows. Okay, next is cost accounting can be explained as follows. So cost accounting is accounting for a cost, okay, which begins with recording of income and expenditure. Okay, so now cost accounting basically is concerned with expenditure. Okay, but whenever you have to take a decision, you have to compare income with expenditures. Okay, so which is why wherever required, income data is also maintained. Okay, in cost accounting. Okay, so which is why we are seeing here income, recording of income and expenditure, and ends with preparation of statistical data. Statistical data means what? Reports. Okay, you have to finally give reports to the higher level manager. It's a formal mechanism by means of which cost of products or services are ascertained or controlled. Okay, fine. Okay, ask me if you don't understand anything, because I'm just going ahead here because it's just the same thing which we discussed in the earlier point. Now, it establishes budgets and standard costs and actual cost of operations, process, departments, products. Okay, analyzes variances, profitability. So here, what they are saying is they're just lining up all the chapters. Okay, it establishes budgets, budgetary control, standard cost, standard costing. Okay, standard cost and actual cost, right? Of operations, processes, departments. So you find out cost of process, cost of department. Okay, you analyze variances. You do that in budgetary control as well as standard costing. Profitability and social use of funds. It's just a kind of general introduction towards your cost accounting. Okay. So now this is basically your cost accounting. So your main thing which you should remember in cost accounting is this sentence. Okay. You can not learn it. I'm not saying learn it. Okay. So you can just, if you remember this, that's all the other things also talk about. Okay. So basically cost classification and analysis of expenditure. Classification analysis of expenditure, using which you can find the total cost and per unit cost. Okay. So that is your cost accounting. Okay. Creating, so basically any accounts which we prepare, whether in job costing, batch costing, contract costing, process costing, okay, anything, okay, we're using cost accounting, right? We're using cost accounting. Next part, next thing is costing. What is costing? So costing is the verb form of cost accounting. Okay. When a cost accountant, now as a cost accountant, okay, you have some expenses, certain things have come. It has to be recorded. Now you will decide whether to use contract costing, whether to use job costing, correct? Process costing, what to use, right? You will take that decision. That is basically called as costing. So you take that decision and you record. When you record, it becomes cost accounting. Okay. That's why all these things are related. Okay. There's not too much of difference in this. So practically speaking, okay, we don't see any difference in this practically, right? But this is the thing, when a cost accounting chooses that which kind of information I should use, okay, that becomes costing, right? So costing is defined as technique and process of ascertaining cost. So whatever decisions you take for doing it, okay, which you as a cost accountant only can take. Okay. So costing is the technique and process of ascertaining cost. So this sentence is important. You should remember this. Okay. Right. It is asked in many ways, in objectives or in some other ways. Okay. Costing is the technique and process of ascertaining costs. Fine. So technique and process both are defined here. Technique is principles and rules for ascertaining the cost. So principles are determining, right? Which process you have to choose. Whether you would go for contract costing or job costing. So you are choosing the principles and rules, right? Each of these have different rules, right? So that's why it is a technique, right? The technique is dynamic and changes with change of time, isn't it? It will go on changing because now a particular transaction, I have classified it as something. Tomorrow, okay, a similar transaction can be classified as something else, depending on the purpose. Okay. So which is why it is dynamic and changes with the change of time. Right. So depends upon what work you are doing. Okay. So the process of costing is day-to-day routine of ascertaining costs. It is an arithmetic process. Okay. So you are saying process because this has to be done regularly. As in now, new costs come in, you will again do the same thing. You'll analyze it and then you will note it down. So which is why it is called as root. It is called as process of ascertaining cost. So technique and process. Okay. Technique because you are following certain rules. Process because you are doing it day in and day out. Fine. Okay. So now let's see. Okay. Now, Fine. Okay. So this is an example. If the cost of a product is 200, then we'll have to refer to material, labor, and expenses. Okay. So to refer to material, labor, and expenses. Okay. So, and how will we get the total cost? It will be like this. Okay. Say, for example, material is 100. Okay. And say labor is 40. Your expense is 60. You will add total and you will get a total of 200. Okay. So now you are right. This is what I explained you, right, some time back. So you will just classify material. First you will classify it as material or labor. Then within material you will classify it again. Okay. You'll have to see whether it is direct, indirect. So what is the meaning of direct material? What is the meaning of indirect material? We'll just, as in how we go on, you will come to know. Okay. So when the next class completes, by that time you will have a complete introduction of what are the terms and all that. Fine. So this is being written by a cost accountant. For writing this, he has decided using costing what to do and noted down using cost accounting. Okay. So you can just say that these two are, they are parts of the same step. Okay. You can just say this is step 1 of doing it and this is step 2 of doing it. Okay. Now, okay, finding the breakup of total cost is a daily process. So when you have total cost, you have a lump sum cost, you try to find out breakup of its constituents. Okay. To really, sometimes what happens, the total cost, you have bought something. Okay. A total package you have bought for 10,000. Okay. Overall, it is fine. You would say it's a reasonable price. Fine. But this 10,000, let us say, have 5 different things. 1, 2, 3, 4, 5. Okay. It is possible that the third one is costly. If you break it up, okay, say you have got this at a cost of, let's say, 2,000. But you should have got it for 1,500. Okay. So if you would have not broken this up, would you have known that there is a scope of economy in this line? You would not have known it, correct? So which is why breakup of cost is very important. Okay. So you break up whatever cost you get, you try to break up to the lowest possible elements, right? Hence it is a arithmetic process or daily routine. Okay. Where we are classifying the recorded costs and summarizing it at each element. Okay, hence it is called as technique. Okay, they are just explained here, technique and process. Okay, costing is a technique and process of ascertaining cost. Okay, so why it is a technique and why it is a process. Okay, so to be honest, see, going into the detail of why it is a technique, why it is a process. Okay, it's not going to do you any good in your career as such. Okay, this is purely from examination standpoint that we are doing it. Okay, fine. So here, right? So breakup of total cost. When you find the breakup of total cost, okay, it's a daily routine. So they have to always, whenever you get any amount or anything, you break it up. You have to break it up to find out if there is any inefficiency in any part of it. Okay. So which is why it is classification, and okay, and because you are also summarizing many times. How you are summarizing? What is the meaning of summarizing? Summarizing means there are many things which we write together, correct? Which basically there are certain things. Let us say there are 4 types of expenses. Okay, expense 1, expense 2, like that. Okay. So as a broad head, I will summarize it and write it as expenses. Okay. And then there will be a breakup. Anyone wants to see the breakup, they can see. But then it has to be summarized also, right? See, In some cases, you want data to be summarized, you only want to see broadheads. Okay. In some cases, wherever you are trying to find out, say, the cause of inflated expense or anything like that, that time you will need the detail. Okay. So both the things are required. Fine. So that is it. Last is cost accountancy. So cost accountancy is what? It is just add costing and cost accounting, it becomes cost accountancy. Here, basically, what they're saying is like when you see both of them together, costing and cost accounting, that we call as cost accountancy. But in practical life, we don't use the word cost accountancy, use the word cost accounting or costing. Okay, that is used like that, but technically, this is how it is defined. So what is cost accounting? Application of costing and cost accounting principles, methods, and techniques. Costing and cost accounting. Okay, both have come here. Application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and the ascertainment of profitability. This is the definition of cost accounting. In the first line, it is clear that both have been clubbed together. Okay. It includes presentation of information for managerial decision making. Right? Thus, cost accounting is what? It is a science, art, and practice of cost accountant. Okay. Why is it called a science? Because it's a systematic body of knowledge. It has its own concept, principles. You have to use that and get to the solution. Okay. So, which is why it's a science. Art, because any artist, and whom do you call an artist? Who can draw something or who can make something which everyone cannot, correct? He can make a statue or he can make an art, right? So this is an art because the cost accountant has some specific ability and skill which only the cost accountant has. Okay, so that's why it's called art. Fine. And last is practice, because this is what you are going to do regularly, right? Practice means you're going to practice it. uh, when when do you say a doctor is practicing? Okay, you say a doctor is practicing when he is having a clinic and every day he is seeing patients, right? As a as a matter of routine. So when routine comes, you call it practice. So this is the day in and day out work of cost accountants. So it becomes the practice. Okay, fine. So what does he do as a practice? He presents information for managerial decision making, keeps statistical records. So what have we seen here? Cost accounting is the art, science, and practice of a cost accountant. Okay, clear? Fine.
Yes, sir.
Okay, so now before we move ahead with objectives of cost accounting, okay, I'll just show you something basic which is called as cost sheet. Okay, so we will be seeing cost sheet in detail in your cost bookkeeping chapter. Okay, I'm just telling you how this is made. In a cost sheet, you find out complete cost of a product. Okay, you basically start with material. This is called as material consumed, raw material. Okay, raw material consumed means what comes in it is your opening stock of raw material. Okay, and add to it purchase of raw material and deduct the closing stock of, okay, deduct the closing stock of raw material. Okay, when you do this, take whatever raw material is already there at the beginning of the period, add purchases, and whatever is remaining, if you take it out, what will you get? You will get whatever is consumed in production. Okay, for example, here if I say opening stock of raw material is 100. Okay, when I started on 1st of January, I started my work here. Okay, previous periods, unused opening stock was already there, 100. Okay, then I purchased 1000. Okay, so total I have if there is no closing stock, if there is no closing stock, how much have I used? If there is no closing stock, how much have I used in my production?
1,100.
Yes, good. Okay. So 1100. But if I say now 200 is left unused at the end of the period, then what is used?
900.
900. Okay. So this is how this 900 is put here. Okay. Materials consumed, this 900, okay, is your materials consumed. Okay. And then you have to add labor, okay, or employee cost, okay, and direct expenses. Direct expenses, any expense for the production objective, which is not material or labor. Okay. We'll talk about this later on. We have explanations for all these. Okay. So you add these things, you get what you get is called as prime cost. Okay. It's called as prime cost. And after prime cost, you add any expense of the factory expenses. Okay. And you have to also add and deduct any work in progress is there. So basically, now as your raw material was left unused 100 at the beginning of the period, okay, and it was left what was left unused was 100. Similarly, some production is going on in the factory. It's possible that there will be some unfinished production items, okay, at the end of the period, right? So maybe like it is finished to the extent of 80%, some more work is there at the end of the period. Okay, that's called as work in progress. So that is added here. So that I'm not showing at this stage, okay, because I'm just showing you general idea of this. Add factory expense, you get something called factory cost, also called as cost of production. Okay, so this is how all costs are collected, right? So you had, this is the first major thing, prime cost, and then you have factory cost. Okay, and here you have to add office expenses. Okay, you have what? Office expenses, then you get what is called as cost of goods manufactured. Okay, so add this, you'll get cost of goods manufactured. Okay, and then later on after this stage, you have to again add and deduct any finished goods which is left. There are three types of, we'll have what, three types of opening and closing stocks. Okay, three categories of opening and closing stocks are there. One is raw material, correct? Whatever you have bought for production, at the end of the period, something can be unused. Then at the factory stage, in factory, there can be some stock which is not fully completed, correct? So this is called as work in progress or work in process. Work in progress or work in process. Right? And at the end, once finished goods are ready, you might not be able to sell everything. Okay, so here also there can be a closing stock. Fine. Okay. So right, so this is called as cost of goods manufactured. And then once from here, you can just you have to adjust the opening and closing stock of finished goods, okay, and add your selling and distribution expenses. Selling and distribution expenses, you get cost of goods sold. Okay, these are the main stages, right? Or here, like you can, what sometimes is done is like after cost of goods manufactured, you just add opening and closing stock, okay, and say cost of finished goods sold, and after that add selling and distribution separately, and then call it as cost of goods. Sometimes that is also then done, but this is what is used normally. Okay, these are the stages, main stages of addition of cost. So cost sheet we're going to study in detail later on. I just wanted to show you how cost is collected. Okay, these are the main stages of cost collection: prime cost, factory cost, cost of goods manufactured, and cost of goods sold. Okay, so objectives of cost accounting. Next, we're going to talk about objectives of cost accounting. Okay, let me give you a break. We can come back 7, 7:15. 7:15. Fine.
Yes, sir.
Okay, so welcome back. We'll continue. Right. Next, we are going to talk about objectives of cost accounting. Okay, these are all straightforward questions, right? What are the objectives of cost accounting? To ascertain the costs using different techniques and systems. Okay, to ascertain the cost, right? Then to determine selling price under different circumstances. So this is, you're talking about this when you first find out cost, okay? Based on cost, whatever is your desired profit percentage, use that and then determine the selling price, okay? Right? So first is ascertaining cost, then second is determine selling price, then to determine and control efficiency. How efficiency? By setting standards for material, labor, and overheads. Okay. So this is basically a standard costing point. You set some good standards, material, labor, and overhead, and try not to exceed it. Fine. So this is one of the object. So determine and control efficiency by using standards. Right. Then to determine the value of closing inventory, valuation of closing stock for preparing financial statements of the concern. So what happens is when trading and P&L account is prepared, closing stock is, in the end, stock taking is done and closing stock, the value of closing stock is ascertained. Okay, so that work is done by cost accounting to determine the value of closing inventory. Okay, then determination of cost volume profit relationship. This is on marginal costing. Cost volume relationship. This is basically cost volume profit relationship. Okay, whether to close or operate at a loss, make or buy decisions, continue existing method of production or replace it. Okay, so here basically they will just compare cost, volume, and profit. Cost is cost, volume is nothing but sales. Okay, and profit is profit. So using the interaction, they sometimes give statements showing whether they should operate at a loss or they should make or buy, whether they should manufacture or buy from an outside production house. Okay, sometimes no, it is you have to operate at a loss for the time being. Okay, because this at this stage you will not understand. When we go to marginal costing, that time you will understand. Okay, but sometimes you have to operate at a loss because even a loss-making product contributes to your fixed cost. So what is that? We will see later on. Okay, at this stage, this is sufficient. And reduction in unit costs of goods manufactured. Okay, reduction in unit cost, right? All these are objectives of cost accounting. Very simple. Try to prepare these things the same day. Okay, ascertain the cost, determine selling price. Okay, determine and control efficiency, and find out value of closing stock. And then, so this is determine cost volume profit relationship. And here is find unit cost of goods or services manufactured. Okay, fine. Next is scope of cost accountancy. Scope means what are the things which come within the purview of cost accountancy. Okay, what comes within the purview of cost accountancy, that is your scope of cost accountancy. Okay, so first is cost ascertainment, find out the cost. Okay, and second is cost accounting, begins with recording of expenditure, ends with statistical data. Okay, cost ascertainment, cost accounting, analysis of cost. Okay, find out what is causing difference between budgeted costs and actual costs. Okay, and fix the responsibility. Analysis of cost. Cost control. Okay, so you can keep cost within set parameters. That is, this is cost control is mostly talking about standard costing and budgetary control. Okay, and cost reports. Then you send reports to various levels of management. Okay, and cost audit, like audit is what? It's just testing whether everything is fine or not. Whatever is recorded is properly recorded or not. Similarly, cost audit is also done by cost accounting. Okay, verify the correctness of cost accounts, right? And it's not only for arithmetical accuracy of cost records, but to see whether the principles have been properly followed or not. Okay. So this is your scope of cost accounting. These are all small questions. Okay. Right. Now we will see relationship between financial accounting and cost accounting. Okay. Relationship between financial accounting and cost accounting. So what does financial accounting do? P&L, balance sheet. Okay. So balance sheet shows what are the resources of the company, okay, and how it is invested, liability and assets, okay, right? And using that money, profit is generated, right? Financial accounting is mainly required by, okay, shareholders, creditors, government, prospective investors, right? It is a general purpose financial statement, financial accounting for everyone, okay? Is mostly concerned with external reporting. But cost accounting is mainly concerned with determination of cost of a product, service, process, or operation, mainly determining cost. Okay. So cost accountant's main primary responsibility is providing cost data for various purposes. That's all. Okay. So this is our fine. Financial accounting and cost accounting, the relation between the two. Okay. Fine. Next is we'll see difference between financial accounting and cost accounting. Okay. So here I'll just tell you in short, like what are the differences. Okay. So for financial accounting, you prepare trading and P&L account. This is the main, main purpose of financial accounting. Okay. And cost accounting provides information to management, okay, for proper planning and control. Okay. And then in financial accounting, classifies records and analysis in a subjective manner, transactions in a subjective manner. It is as per the nature of expenses. Okay. So here it will record expense in an objective manner. Okay. It is according to the purpose for which costs are incurred. So in financial accounting, once you, what we'll see is whether you have incurred or not. If you have incurred, it will write. Okay. So cost accounting will not always see whether it is incurred only. Okay. It will also see what can be incurred in future. Okay. What is possible to be incurred in future. And now also maybe you are using your own resources, which is why you are not paying money, but you will have to find what cost it is for. Okay. You will have to find the cost for it. For example, say financial accounting, if you are not, as per this point, one example I will give you. Say your own building. Okay, financial accounting will not write any rent for this. Okay, you are not paying, but cost accounting, okay, it will take into consideration rent also, notional rent. Right? Had you not invested in building, you would have got some rent for that, right? So cost accounting will see that also. Okay. Cost accounting basically will see relevant cost. Okay. If you are going for a decision where you are going to have both units in the same building, okay, then it is irrelevant. You are not spending anything. But say if there are two opportunities which you have, 1 and 2 for investment. For one, you can use whatever our building is there, you can use the same thing. The second one, you have to rent it out, rent something from outside also. So here, this rent value has to be written here. Okay. Here, whatever is the rent value, it will be written here. Okay. So it mostly functions on the basis of relevance of costs, right? You will understand these terms little bit when as and how we move ahead. Okay, fine. So just remember here, it analyzes in a subjective manner, it records expenses in an objective manner. Okay, and then here it financial accounting focuses on recording expense. So basically, if expense has been incurred, you will record it. Okay, you will not see whether it was efficient or inefficient. Okay, if you have paid it to an outside party, then you will have to record it in financial accounting. Here they will give more details about the efficiency of the use of funds. Okay, then it will give P&L, operating results, and balance sheet. Okay, at the end of the year.
Sir, I didn't get this point.
Which point, Rashi?
The third point of cost accountancy.
This one.
Hmm.
So here, okay. So what do financial accounting do is they do not attach any importance to control. That is, say if I have paid you 20,000 rupees.
Yes.
Okay, so it will be written as 20,000 rupees. But in cost accounting, if I've paid you 20,000 rupees, I'll write 20,000 rupees, and
With the purpose.
how much more I have paid, that also I'll write. In the market, this is now say it is available for 12,000, but I have paid you 20,000. So that talks about efficiency of my use of funds, correct?
Okay, okay.
So that will also be written. So that's why here we are talking about standard costing and budgetary
Budget.
control.
Okay, okay, sir. Yes.
So we also see whether whatever money is invested, whether it is being efficient or not. In financial accounting, you have paid, so write it. That's it. Okay.
Okay.
Then next is it. Here it reports P&L and balance sheet. Okay. And at the end of the year or at the end of the period. Here it is as and when management requires, it will give reports. Okay, there's no such period as such. Okay, and then so who are the users? Financial accounting users are basically everyone. It's called as general purpose accounting statements. Okay, so almost everyone, shareholders, creditors, banks, government, everyone uses it. Cost accounting is used for internal management. Okay, internal management personnel of the company. Fine, and then your it is prepared periodically, quarterly, half yearly, yearly. Okay, quarterly, half yearly, yearly, and here it is prepared as and when required by the management. Okay, similar to what we saw in the previous point. Okay, this is accounts of whole business. Okay, this is accounts of whole business, and cost accounting is you will give reports only for that part of the business which is required, or whatever is the decision in question. Okay, or whatever is the unit in question. And this is financial accounting is basically for the entire business. Okay, and it is only a part of financial accounts. Okay, and it includes it records commercial transactions. Okay, right, all kinds of commercial transaction. It can be goods, services, everything. Okay, and here cost accounting mostly focuses on manufacturing part. Okay, whatever goods and services which we manufacture. Okay, so more into what is manufactured, right, and which then enters the production. So our manufacturing expenses. Here there are some other expenses which are other than your what you are manufacturing, that also comes in financial accounts. For example, um, dividend received, bank interest received, that will be there in financial account. It won't be there in cost. Okay. Then again, external transactions. Okay, that is business and third party. Here, internal transactions. They are mostly internal transactions. It is not, so the selling part, once you sell the goods and get the profit, it comes in the purview of financial accounts. In cost account, it is till you manufacture and make it ready to sell. Okay. And financial accounts, actual figures and facts. But cost account, partly figures, partly estimates. Some estimates are also used in cost accounts. Okay. But financial accounting, always facts. You'll write facts. Okay. Now, information regarding efficiency, you do not have here. Okay. Information on efficiency. What is the efficiency of worker? That will not be there. What will be there? How much amount you have paid to workers? What are the wages? What are the salaries? That will be there. Here, efficiency will also be there of employees, plant, machinery, everything. Okay. So you can find out their performance in cost accounts. Now, stock is valued at cost or market price, whichever is lower, always. Okay. Financial accounting, stock is cost or market price, whichever is lower. Okay. And in cost accounting, you value at cost. Okay. Now, this is said to be a positive science. Okay. Because it is subject to legal rigidity. That is, you have to operate within certain law. For example, Companies Act. That's why it is a positive science, because there is something outside which is also making sure that you are doing a good job or not. Okay. You are following some outside law as well. So which is why it is positive science. Okay. And cost accounting is positive and also normative. Okay. It's said to be positive as well as normative because it includes techniques of budgetary control and standard costing. It tells you how to do some. Normative science means anything which tells you how to do a job better. Okay. Here you are always comparing with better yardsticks. It tells you how to do a job better, which is why this is positive and also normative. This is only positive. Okay. Then last thing is, it is normally kept companies, for companies, financial accounting is kept as per Companies Act 2013. Okay. Cost accounts are voluntary. It is for management purpose. You don't have to follow any act unless cost audit is applicable to you. Only for some companies, cost audit is applicable. In that case, okay, you will have to follow Companies Act provisions of cost audit. Otherwise, it's voluntary. You don't have to follow anything. Okay. These are the differences between financial and cost accounts. Okay. Any questions so far? Okay. So, okay, now we'll talk about cost accounting and management accounting. Okay. So management accounting is concerned with management. Correct? It involves techniques, concept, which help management in establishing a plan for reasonable economic objective. Reasonable economic objective means whatever is the financial requirement. Okay. If you want to go for a new project, that is a reasonable economic objective. Okay. If you think one project is loss making, you want to close it down, that is a reasonable economic objective. Okay. So management account is concerned with the management. It gives a report for the management. Okay. Now, any concept from cost accounting, financial accounting, economics, mathematics, statistics can be used in management accounting. Okay. Management accounting can use any concept from cost accounting, financial accounting, economics, any other disciplines also it will use wherever required. Okay. And Management accounting, what the accountant accumulates, summarizes, and analyzes available data. He will analyze data, okay, in for and give his decisions based on day-to-day tasks of management. Okay, so his reports will be concerning day-to-day tasks of management. Okay, he reviews all decisions from management point of view. Fine. Scope of management accounting is broader than the scope of cost accounting. Cost accounting mainly deals with what? Cost, right? But management accounting deals with so many subjects we have just seen here. Correct? Financial accounting, economics, mathematics, statistics, cost accounting, psychology also. Okay. So which is why scope is larger. Management accounting, it utilizes principles of financial and cost accounting in addition to management techniques. Okay. It uses all these statistics, mathematics, economic, law, and psychology. How psychology? I'll tell you. Sometimes, see, an example I can tell you is, say if your current profit is 10,000, okay, right? And there are two main competitors here, okay? You are A, there is one more B, okay? Now, so you have two products and they also have two products. Both are different, okay? Your products are different from them. Now, if you are thinking of entering in one of their products, okay, you are trying to make this two three, okay, entering into their product, and what you as per your internal information, if you add this product, okay, your profit will increase to 15,000. Okay, so it appears to be a good decision, right? It appears to be a good decision, but management accountants will have to think the psychological aspect also. If you have entered his business, then he will also enter your business, correct? So now considering that you are doing three products, he is also entering into one of your products, so that he has three products now. Okay, if he is entering your business, okay, what will happen? He will eat into your profits, correct? Because if you had 100 customers, then he is entering means 50 customers, let us say, will go to him, correct? So he will eat into your profit. And let us say he has ate into 6,000 worth of your profit. So now what is your effective profit? 9,000, which is less than 10,000, right? So that's why you have to see psychological aspect also. Like once you do something, how will the other person retaliate? Okay. Sometimes uh, it's a business decision. So if it's a business decision, it is not psychological. They're doing for business. But sometimes the psychology works like if you have done this to me, then I will do this to you, right? So that actually is very damaging to everyone. Okay, to both the parties. So which is why management accounting also deals with psychology. Psychology is very, very important actually. So it helps in determining policy and formulating plans. Right? So then, so if they give you a question of relation between cost accounting and management accounting, now you know what to write. Even if they ask financial accounting and cost accounting relation, okay. So even in your tests which I'll give, this will be asked, okay, the relation, to see how you write. Okay, so cost accounting, and so you can, I hope you will be able to find out what is the relation between cost accounting, management accounting, financial accounting and management accounting, financial accounting and cost accounting relation. Okay, if you know what both things are, you can easily write the relation. You don't have to write too much. Okay, just a para is sufficient. and any 4 points, 5 points, more than enough. So, but end sentence, for anything in question of relation comes, you should write this, the ending sentence. Okay. Hence, cost accounting and management accounting are interdependent, greatly related, and inseparable. Okay. Any relation, you have to write the last sentence like this. Okay. As conclusion. Fine. Now, next is advantages of cost accounting. Okay. So, next we are talking about advantages of cost accounting. Okay. Cost system reveals unprofitable activities, losses, or inefficiencies like. Okay. So what are the advantages of cost accounting? This is also very important. Fine. It reveals unprofitable activities, losses, and inefficiencies like what? Wastage of manpower, idle time, and lost time, wastage of material like spoilage, etc., wastage of resources like inadequate utilization of plant machinery. Okay. So it reveals unprofitable activities like these. Then it locates the exact causes for decrease or increase in profit or loss. Okay. And identifies the unprofitable products and product lines. It finds out the unprofitable products and product lines. Okay. Cost accounts furnish suitable data and information to the management. It furnishes suitable data and information to the management. Okay. And helps in decision making. Okay. Helps management in decision making. Straightforward. So cost accounting is useful for price fixation purposes. Okay. It is useful for price fixation purposes. So basically in cost accounting, you'll first find what is your bare minimum cost, and then you can fix price. Okay. And in standard costing and budgetary control, optimum efficiency is set. Okay. These are the optimum level efficiency guidelines, standard costing and budgetary control. Cost comparison helps in cost control. When you have a base to comparison, okay, you can always control yourself, right? Whenever you exceed, you will come to know, isn't it? Right? When we do certain blood tests and all, correct? Why sometimes we just do precautionary blood tests, okay? You just see if something is more or less, then you can control yourself, correct? So your standard costing and budgetary control are like that. They are pointers for you, right? So there is something called, uniform costing and interfirm comparison, which we will see towards the end of the chapter. Okay, that time I will explain you what is uniform costing and interfirm comparison. Then cost system provides for ready figures for use by government. Okay, so if you have a good standard cost system, a good cost system, then your data will be used by government, wage tribunals, and all, and even trade unions. Which trade unions also you can share the data. Let's see, my cost itself is this much, which is why I will not be able to pay this much bonus, but I'll have to cut it a bit. If you have proper data to back up, then others will also understand what you are talking about. Okay. When a concern is not working to full capacity, okay, so you can find the cost of idle capacity. Okay. Introduction of cost reduction program with operations research and value analysis leads to economy. Okay. If you run a cost reduction program, right, then you can reap benefits of it. Here, see, a word is used, value analysis. value analysis. What is value analysis? I'll tell you. Value analysis is something, say, okay, you are manufacturing a brush. Okay, let's say you are manufacturing a toothbrush. Okay, okay, you manufacture a toothbrush. So cost of this for you is, cost of this is let us say 50 rupees. Okay, so in value analysis, what is done is you see what are the things in this which is not valuable to the customer, but you have to spend cost. Okay, so say if here you add a patch here. Okay, you the way you manufacture it is you tend to add a, let me say, okay, you add a, some kind of patch here. Okay, for beautification or whatever you are adding it, right? Now this patch itself is, it costs you 5 rupees, this green patch. Okay, so you have done lots of survey and the customers are told that this is of no use to them, they don't even see this. So that means you are spending money but customer has no value. Okay, so this process of finding this is called value analysis. So what it helps to reduce cost, that now you need not put this patch, correct? I'll now remove this patch. Okay, if I remove this patch, then my cost will reduce to 45 and my sales will also not be impacted. It's called as value analysis, also called as value engineering. Okay, so marginal costing is employed for suggesting various courses of action. Next chapter will be marginal costing. Okay, it will be very interesting and very good. It is like the best chapter of cost accounting is marginal costing. Okay, marginal costing is employed for suggesting courses of action to be taken, right? So it helps you in decision making, right? And then determination of cost centers or responsibility centers to meet the needs of a cost accounting system, ensure that organizational structure has been properly laid responsibly. Okay, so this is determination of cost centers and responsibility centers. The cost centers is, it is a center where you collect all similar costs together. Okay, one cost center, you collect all similar costs together. For example, you can have one factory. Okay, so one factory can be one cost center. Okay, or you can have divide it into 4 parts. Okay, divide this factory into 4 parts, where you can call one as finishing. This will be one cost center. We'll collect costs separately for this. So the more you break it into different cost centers, you will have good quality data. Okay, you will have segregated data. Fine. So one factory can have several cost centers. So there, as such, there is no requirement that you need to have several cost centers or only one cost centers. It is how good data do you want? It's based on that. Okay. So more you divide it, the better data you will get. But you don't want to make it too cumbersome also. Okay. So here, so cost center is that. So responsibility center is any cost center which is headed by a human being. So cost centers can be personal or impersonal. Okay, there are some cost centers, some machines and all, which are not manned by anyone. Okay, so but responsibility centers always will be something which is headed by a human being. Okay, it is created that way because you can always control cost through a human being. Okay, so that is called as responsibility center. Again, later on, you're going to study cost centers and responsibility centers. Okay. Perpetual inventory system is continuous stock taking. Okay. Which includes a procedure for continuous stock taking, is an essential feature of a cost system. So in perpetual inventory system, you uh, the the stock taking is done regularly. It goes on continuously, not at the end of the period. Where you go for a periodic inventory system, you will count the closing stock only at the end of the period. But in perpetual inventory system, you will always be counting it parallelly to see if everything is fine or not. Okay. So here, with the cost system, you can have perpetual inventory system. It has got various advantages. Okay. The operation of a system of cost audit. Okay, the operation of a system of cost audit. So basically, cost audit will help you prevent manipulation and fraud. Okay. Okay, cost audit is very useful because if people know that cost audit is going on, then there won't be any fraud. Okay, it helps outside parties also, like shareholders, consumers, and government. Fine. So these are basically the advantages of cost accounting. Fine. These are your advantages of cost accounting. Right. Limitation. Next is limitations of cost accounting. Okay, this is a small part. Okay. So first limitation is cost accounting is not an exact science, but it is an art developed through theories and accounting practices. Over a period of time, it has developed. Okay. So many of the theories cannot be proved, nor can they be disproved. Okay. So many of the theories cannot be proved or disproved. Right. In course of time, they have become conventions. So this appears to be the best way, it works the best. So you are using it. It doesn't mean that there is nothing which is better than this. Okay. So that is the thing. It is an art, okay, not an exact science. Okay. So these principles are dynamic and are changing from day to day. So basically, first limitation what you have to write is it is not an exact science but an art. Okay. And many of theories cannot be proved or disproved. Okay. And principles are changing from day to day. Right. So then we're continuing with the same thing, which are limitations of cost accounting. Okay. Large number of conventions, estimates, and flexible factors. Okay. The more the estimates you use, accuracy will reduce. Correct. So no cost is exact as it incorporates a large number of conventions, estimates, such as what are the conventions and estimates which are used. Okay. Classification of costs into elements. Okay. So whenever you classify a cost into many elements, there is a possibility that some cost may be missed out. The more you classify, there is always a chance that something can be missed out. Okay. So, and then material issue pricing based on average or standard cost. So you are in, have you heard about FIFO, LIFO, average cost basis and all that? Material pricing.
Yes, sir.
Okay. So material issue pricing based on average or standard cost. So when you issue it, normally you use standard cost for it. So because you are not using the exact cost for issuing, there can always be a discrepancy. Okay. This is one of the things. So you are buying it at real cost and you are issuing at different cost, correct? Standard cost. Now, apportionment of overhead expenses in their allocation to cost unit centers. Okay. So again, for overhead expenses, overheads are apportioned. So basically, there is one common overhead for four cost centers. On some basis, you divide it among the four cost centers. So while dividing, it's possible that you have charged something more and some other cost center less, correct? Okay. So apportionment in detail, we will study with problems and all in detail in overhead chapter. Okay. Apportion is nothing but distribution. So arbitrary allocation of joint costs. Again, joint costs are this is from process costing, joint costs. Okay. In process costing, what happens is there is one product. Okay. You produce it, produce it, whatever maybe you can heat it or add chemicals, whatever you are doing. Beyond a certain point, okay, it gets broken up into 2-3 products. Okay. For example, your petroleum, petrol and diesel, they are all byproducts of the same process. Okay. So in this case, whatever costs are incurred before the split off point, that has to be distributed to these three products. Again, there is, when you are distributing on some basis, there will be some arbitration, correct? So that is the point that they are talking about here. Division of overheads into fixed and variable. Okay. So when you divide overheads into fixed or variable, you are just doing it on some basis. So you might not get it exactly. Okay. It might not be exactly. Okay. So what is fixed overheads? It will not change for a period of time. Like for the whole year, it will not change. Okay. Right. Like rent, lease. Okay. Variable is it will change with each product. Fine. Maintenance of cost accounting system is expensive. Okay. This is one of the limitations. Since the results shown by financial accounts and cost accounts differ, okay, you have to prepare reconciliation statement. In cost bookkeeping, you will have this reconciliation topic. Okay. So when results are different, you have to prepare a reconciliation statement to see why it is differing. Okay. So cost accounting lacks the uniform procedures and formats. Okay. Hence, its results can be mere estimate. So this is just for theoretical purpose, but cost accounting is extremely useful. Okay. So next part, this chapter is going to be a bit boring. Okay. So it has got only information and information. Okay. So next is installation of cost system or cost accounting system, how to install it. Okay. There's no ready-made cost system suitable for a business. So you have to design it. Okay. It's nothing like which is available in the market. You can just install and use it. Okay. Not like your laptop or computer, buy a Windows software, install it and use it. It's not like that. Okay. Each business will have different requirement. Okay. So prerequisites before installing a cost system. So what are the requirements before you install? What are the things you need to have? Okay. So when you see programs of in YouTube where they teach how to prepare some eatables and all that, correct? So they tell you what, before you start, please have these ingredients ready, correct? Only then you can start your real preparation, right? So after you have switched on the gas, after that you cannot run here and there for certain things, correct? So similarly, before installing a costing system, you should have these things with you already. Okay. Nature and method of production, varieties and quantity of each product, and other technical aspects should be examined. Complexity of production methods judged. Okay. So see what is your nature of production. Okay. How many varieties you are producing. Okay. See whether that cost system will be applicable to you or not. Study all these things. Next is size, layout, and organization of the factory should be studied. Okay. So maybe whatever it is being used, it is for smaller factories. Now you are trying to apply it to much complex factory. So whether it will work or not, you will have to study it in detail. Okay. So similarly, size, layout, and organization should be studied. Methods of purchase, receipt, storage, issue of materials should be examined and modified if necessary. Okay. Just see, like for that costing system, how is the entry being made? Okay. So does it suit, say, only if you are buying something, say 100 times a week, and in your factory you are buying 1,000 times a week? So that might mean that you cannot run with your current staff. You will have to basically hire some new staff for that. Then you will have to consider that cost also. Okay. So just see what are the things, what you are getting, and what is your complexity. Okay. Wage payment methods should be studied. Okay. So wage payment methods means for that costing system, you will need some staff, right? So how you would be paying wages, and in that costing system, not just their wages, but your direct wages of your employees. Okay. So how those, if you are paying it using some method or something, how that can be integrated in the costing system. Okay. Requirements of management and policy are adopted towards cost center. What is the requirement of the management? Okay, it is providing many good things, but that much is not our requirement. We only need few things. So then that will be useless for you. Okay, see what is our requirement. Okay, now system to be installed should be economical, right? This is very, very important. Everyone can bear something. Okay, so any business, anything which you do, it should not be beyond what you can bear, right? So then you will have to close down if that is the case. System should be simple and easy. Simplicity should be there. It should not be there out of 10 employees, only one is understanding. So if he is gone on leave, then you have gone for a toss. It should be easy, that easily it should be transferable. Okay. Appropriate and properly suited to the organization general point. Okay. Minimum clerical work, right? Allow cost control to be exercised. Fine. Suitable reporting procedure should be there for the management based on principles of exception. Now, principles of exception means there can be small 100 variances. Okay. But you will not send everything to the top management. You will send to top management only on what their action is required. Okay. So out of 10, there has to be some basis. Okay. Out of 100, maybe only 8 or 10 you will send to them based on if the variance is, let us say, beyond 1 lakh rupee or whatever can be the criteria. So that is called exception. By exception, because you are making some exception for the rest. All 100 you are not sending, right? Okay. You are making an exception for the rest. You are sending only some critical items. So it's called management by exception. Okay. So now your system should be such that everything should be properly fed. So only what should go to them, that should go. If emails which are not required by them, if that gets shot to them, right, then they will also have a problem, right? So which is why everything, all these things should be checked. Prerequisites, these things you have to check. Okay. Now next point is requisite. These things are prerequisites. So be very careful whether they are asking prerequisites or requisites. Prerequisites means before installing, what are the things you should check? Requisites means now, what are the qualities of a good cost accounting system? Okay. Okay. So in general, this is a general thing, not about what are requisites of a good cost accounting system. Okay. Simple and practical. Okay. Data should be accurate. Fine. Need for uniformity and consistency in classifying treatment. So it should not be that one thing is being treated in one way, another thing in another way. Should be uniform. Okay. And comparability should be facilitated. Capable of being integrated with financial accounting, statistics, taxation, right? We'll have to integrate it many times, isn't it? So it should be, it should be capable of being integrated with other systems you are using, okay, if required. Flexibility should be there for modifications, okay. Then management should be satisfied that the system is being useful. If the management start thinking that, oh, it is not useful, it's too much time consuming, then that will be a problem. Okay, fine. So all well till now. I can give you one more break. Okay. Normally I give one break. Okay, because this is being fully theory, I'm just giving you another break. Now you can be back at 8:20. Right? Okay, you can just be back at 8:20. Okay, 8:20. Okay, so let's continue. So next part is cost objects, cost centers, cost units, and elements of cost. Okay. First thing is, let's see what is cost. Okay. Cost is a measurement in monetary terms of the amount of resources used for production of goods or rendering of services. Okay. So amount of resources is cost. So amount of resources means what? Okay. Whatever is your, say, for manufacturing a particular product, you are spending some material, you're spending some labor, some expenses. All these are resources used. Okay. When we add all of this, it will be cost. Okay. Is a measurement in monetary terms of the amount of resources used for production of goods or rendering of services. It is a total of all expenses. Okay. Cost is also defined as the amount of expenditure, actual or notional, incurred on a given thing. Okay. So it is also the amount of expenditure, actual or notional, incurred on a given thing. Fine. So it is given or is sacrificed to obtain something. Right? Given, another word what you can use is it is sacrificed to obtain something. Okay. Fine. And cost is a generic term and you have to qualify it. That is, you have qualifying means you have to add some word, okay, to add to its meaning, like prime cost, factory cost, okay, works cost, fine, selling and distribution cost, all that. Okay. Cost is different from value. Okay. Value and cost are different things. Cost is measured in terms of money, okay, and value in terms of usefulness. Okay. Sometimes it is possible that even an item of 50 rupees is doing a work worth 500 rupees for you, correct? It happens sometimes that something for which you have spent less, it is doing a much higher level work for you. Converse is also true, right? It happens every time that you have spent money on something, okay, but it is giving you utility of only 2,500, right? Okay, so just this part is important. Cost is different from value. Okay, cost and value are different. Cost is measured in terms of money, value in terms of utility or usefulness. Okay. Now here you can see the elements of cost. Okay, these are the elements of cost. So this is first one. Here you can see elements of cost. Main thing is material, labor, and expenses. Okay. In that cost sheet which I had shown, material and labor were there. Apart from there, all other things were expenses. Correct? Be it direct expenses, be it factory expenses, office expenses, selling and distribution expenses. Okay. All those were expenses. So which is why you can in general classify it as material, labor, and expenses. This is how it is classified. Now each of these can be direct or indirect. Okay. Each of these things can be direct. These are all direct and or indirect. Okay. Fine. So this can be direct or indirect. If you see so this point we had seen earlier, that prime cost is a total of direct material, direct labor, and direct expenses. Add these three, you get prime cost. Okay, you get prime cost. And you add these three, you get overheads. It is called as overhead. Okay. We'll see what direct and indirect is. Okay. So what is direct material cost? Okay. It is the cost of material which can be attributed to a cost object in an economically feasible way. Okay. When we say in an economically feasible way, that means it must have a direct connection with the product. Okay. That's called as direct material. Can be identified in the product and can be conveniently measured or charged to the product. The finished goods, you will be able to see that. Okay. That's called direct material. Directly enter the product and form part of the finished goods. Example, timber in furniture making, okay, cloth in dressmaking, bricks in building house. These are all direct material. Okay. Now all these are classified as direct material. Okay. These are normally classified as direct materials. Here, jute in manufacture of gunny bags. Okay. Gunny bags means sacks. Okay. Pig iron in foundry. Foundry is iron works. Okay. So pig iron in foundry and fruits in canning industry. So these are all direct material. Okay. Then material specifically purchased for a specific job, processor order, like glue for bookbinding, starch powder for dressing yarn. So if we are preparing one order, and for that order you are buying all materials, okay, that will all be direct material. Fine. Parts or components purchased or produced like batteries for transistor. Okay, it's directly going into transistor. It is direct material. Primary packing material like cartons, wrappings, cardboard boxes. Now, primary packing and secondary packing. There are two things. Okay, two things called as primary packing material and secondary packing material. Primary packing material. Okay, primary packing, many things when you manufacture, say for example, peppermints you are manufacturing. Okay, but you cannot manufacture and keep it loose. Okay, you have to pack it then and there, right? There are certain things which have to be packed then and there. Cigarettes, take cigarettes. Okay, they are all manufactured loose. So they have to pack it into those packets then and there, correct? There are certain things which are not packed. So there are two things. One, just for saving that product, okay, you will have to pack it as soon as you manufacture it. Second is, after your manufacturing and storing in a godown, from there to send it for sales, you will do some higher level packing. Okay, that is secondary packing. Fine. So that is secondary packing. Primary packing is as soon as product is manufactured, you have to give a packing to it to keep it safe. Okay, that's called as primary packing. So this is direct material. Okay, and secondary packing is indirect material. So it is basically a selling and distribution expenses. Secondary packing is a selling and distribution expense. Okay, fine. So primary packing materials like cartons, wrappings, cardboard boxes, etc. Okay. Now these cartons can sometimes be primary packing material, sometimes it can be secondary packing also, depending on the purpose for which it is used. Okay. So these are all direct materials basically, which directly enters the product. You can mostly see it in the product. Okay. Say engine in a moped. Okay. So it doesn't mean that you will always see it like directly you can see. Now engine is concealed a bit, okay, but it is there uh, in the moped, right? So all those things come as direct material. Indirect material, okay. So indirect material does not form part of finished product, okay. So that means whatever indirect materials you are using, somewhere there it would be there, right? But it does not form part of the finished product. You will never see it anywhere in the finished product, okay. Materials which cannot be allocated but which can be apportioned to or absorbed by cost centers or cost units. So it is something, okay, which cannot be absorbed by cost centers or cost unit, but it has to be apportioned. So what is the main thing? Now apportioned means here, if you have a, so basically for secondary material, you've got 4 cost centers, let us say, okay. Right, so these are 1, 2, 3, 4 cost centers are there, okay. So now these, if there is say some service, let us say there is one supervisor, he is supervising all 4 of these, okay. So now because his expense you cannot directly see in any of these, okay, you cannot see this expense directly in any of this. Some time is giving here, some time giving here, so you have to apportion his cost on some basis, okay. You have to apportion it on the basis of time to all these. That's why it's called as indirect, okay. Direct means a cost, you incurred some cost and the whole thing is directly incurred by this, okay. You don't have to apportion it. Apportion means you have to divide or distribute in some basis, okay. You don't have to divide or distribute the direct expenses, okay. If say for example some electricity is being used and for 4 units and they all have their own meters, now you directly know what is for each of the 4 units, correct? The bill for each of the 4 units. So that is said to be absorbed, not apportioned, okay. Apportioned is when you are dividing using a basis, okay. Materials which cannot be allocated but which can be apportioned or absorbed by cost center or cost units. So indirect materials are always apportioned or absorbed, okay, and you cannot see it directly in the finished products. So these are examples now. Stores used in the maintenance of machinery, buildings, etc., like lubricants, cotton waste, bricks, okay. The stores used in maintenance. So in this, for if you are using lubricants, can you exactly tell that in machine A I have used uh, 10 milliliters of lubricant and machine B I used 8 milliliters of lubricant? That cannot be told, correct? So, so these are this is the thing. And secondly, once lubrication is done as such, you cannot see it in the product directly once the work is done, okay. Bricks and cements, okay, all these things which are used, bricks and cements not for normal construction, for maintenance of machinery, okay, only used for maintenance. So that is considered as secondary, okay. Now stores used by service departments, it is non-productive departments like boiler house, powerhouse, boiler house, and canteen, etc. Okay. Stores, okay, items of stores which are used, okay, in non-productive departments. Now those things are not going to enter the products, correct? So, and then Materials which due to cost being too small are not considered worthwhile to be treated as direct materials. So cost is too small, then you add it as overheads. Okay. Now, so for example, if you have a tool, okay, I have bought a tool for rupees 100. Okay, its life is, it's a tool. Okay, and its life is, let's say 5 years. Okay, its life is 5 years. Now, okay, I'm using it for directly for one particular manufacturing only. Okay, one particular unit. So if I depreciate it, let us say 20% depreciation. Okay, if I depreciate it, so first year I'll have to give a depreciation of 20%, balance will be 8. Do you think for just 100 rupee item it is worthwhile to give this much of clerical attendance? No, right? That's why it is considered as overhead, even if it is a direct expense. Okay, the cost is too small, right? So that's about material. Okay, direct and indirect material we have seen. Now next is your employee cost or direct labor. Okay, cost of employees that can be attributed to a cost object in an economically feasible way. Similar definition as material. Okay, fine. So it is that labor which can be conveniently identified or attributed wholly to a particular job, product, process, or expended in converted raw materials into finished products. Okay, so which is used for preparing the main product, manufacturing the main product. Wages of such labor are direct wages, and examples of it are, okay, actual production of any item. Okay, actual production, labor used in that. Labor engaged in aiding the manufacture by supervision, maintenance, tool setting, transportation of material. So any supervision and all which you are doing, okay, directly, and the supervision is being done for units which are directly into production. Okay, all that will be direct labor. Okay, and then inspectors, analysts specially required for such production. Any inspection or anything you require just for the direct production. So that these things will be direct labor. Now, what about indirect labor? Okay, so it cannot be directly attributed to a particular cost object. Okay, wages of labor which cannot be allocated but has to be apportioned to or absorbed by cost centers. Okay, then that is indirect labor. Examples are change hands and supervisors. Okay, now here also you have seen supervisors, there also you have seen supervisors. Okay, so these supervisors are basically, they will be supervising uh, those plants or something, okay, which is not direct. Okay, so basically not direct means they will be supervising certain things which are just aiding the actual production, not doing the actual production. Okay, so those kinds of supervisor will be indirect labor. Okay, those who are directly supervising the actual work, like where laborers are working, okay, they have their supervisors, right, who are seeing actual production. So those will be direct labor. Okay, others they are supervised because there are many things, many other works which are not directly related to supervising. Correct. For example, servicing of machines and this that. Whoever are in charge of that such departments, those supervisors will be indirect. Okay. So it all depends on what work you are doing, right? So it is also possible that one person, one resource has done some direct work, some indirect. So maintenance workers, men employed in service departments, okay, maintenance, handling and internal transport, apprentices, trainees and instructors, clerical staff, labor employed in time office. All these are, okay, indirect labor. Okay, all labor employed in service departments. Okay, service departments give service to production departments, so they are considered indirect. Fine. So all these things, all these are indirect labor. So just sometimes questions will be asked, examples will be given, you will have to identify whether it is direct or indirect. Okay, fine. Now we've finished material, labor, direct and indirect both, correct? Now expenses. Okay, so first direct expenses. Okay, again same thing you will say, expenses relating to manufacture of a product or rendering of a service, which can be identified with a cost object other than direct material and direct employee. So any other expense which you can directly identify with the production objective, but which is not material or labor, that is direct expenses. Okay. So they are directly charged directly to particular cost account as a part of prime cost. Okay. So they are just directly charged to, okay, that particular unit account for which they are incurred. Examples are GST, royalty, okay, architect or supervisor's fee, cost of rectifying defective work. Okay, these all go as direct employee expenses. Okay, so again is traveling expenses to the city. If you have to travel specifically for the work of a production department, okay, that will be put into direct expenses. Okay, it's neither material nor labor, but is direct. So direct expenses. Experimental expenses of pilot projects. Okay, so some expense which are not production, but you are doing some trial run and all, they are put under direct expenses. Expenses of designing or drawings of patterns or models. Okay, these are again certain things which are not labor. Okay, it is just some assisting part. If something is like that, you can put in direct expenses. Repairs and maintenance of plant obtained on hire. If you have obtained a plant for a particular work, one job, okay, so that rent will go as a direct expense. Normally rent is indirect expense, okay, but if you have taken it on rent just for one particular job, then it will be a direct expense. Okay, and any repair, maintenance, whatever happens on that plant, that will also be direct expense. Okay, hire of special equipment obtained for a contract. Hire of special equipment obtained for a contract, same as last point. Fine. So this is now direct expenses. Now we will talk about overhead. Okay. Now overhead, it is total of indirect materials, indirect labor, and indirect expenses. Okay. Not directly identified or allocable to cost object. The aggregate of cost of indirect material, indirect labor, and other expenses, including services, as cannot conveniently be charged directly to specific units. Overheads are all expenses other than direct expenses. Okay, fine. So all expenses incurred for or in connection with general organization of the undertaking, that is cost of operating supplies and services used by it, and maintenance of capital assets. Okay, this will be overheads. Okay, So basically, uh, for anything for general well-being of the organization, whatever you are using, any material also you use for general repairs and all that, that will be overheads. Any labor who is doing that general work, that will be overheads, indirect labor. Okay, same will be any other expenses, which is not direct. Okay, fine. So here we have completed classification of direct material, direct labor, direct expenses, indirect material, indirect labor, indirect expenses, which is overhead. Okay, fine. Now, what is prime cost? Okay, we just saw, I'd shown you in the cost sheet. Aggregate of direct material, direct labor, direct expenses. Okay, it constitutes 50 to 80% of the cost of the product. Okay, so large proportion of the cost is prime cost of a product. Okay, cost object. Okay, so cost object is what is the objective for which you are spending. Okay, that is the cost object. Okay, if you are manufacturing a ship, then ship is the cost object. Okay, whatever is your main purpose of spending, cost object is the technical name for product or service, a project, department, or any activity to which cost relates. Okay, that is called as cost object. It's a general name. Okay, so establishing a relevant cost object is crucial for sound costing system. Cost object could be defined broadly or narrowly. Broader level, it can be called as cost center, as I told you, right? Cost center. Lowermost level is cost unit. So cost unit and cost center, I'll tell you. Cost center is a broad unit. Okay. So normally you can say one factory can have, let us say, one factory is having 10 cost centers. Okay. Okay. In each of the cost centers, we are accumulating the cost. A cost unit is, okay, cost unit is not unit cost. So this is cost center. Okay. Now what is cost unit? Cost unit is not per unit cost. See, in all businesses, for manufacturing, there is a convention that they manufacture for a particular lowest unit. That is, for brick, they manufacture show cost for, okay, per 100 bricks, thousand, sorry, per 1,000 bricks. Okay, in brick building, uh, any factory will never show you cost of one brick. They will show minimum, which they will show minimum is 1,000 bricks. So this 1,000 bricks is called cost unit. So whatever they are using commercially to sell. Okay. So if they sell to anyone bricks, it will be only in packs of 1,000 bricks. Cost will be shown in 1,000 bricks. Okay. So that's called cost unit. So below 1,000 units, the company will not show price separately. Okay. Although you can do it, like if price of 1,000 bricks is, let me say, 10,000, one brick will be 10, correct? 10,000 upon 1,000, that you can calculate. But company will accumulate cost lowest for 1,000 bricks. Okay. So this cost unit is chosen as per whatever is applicable in that particular business. Okay. So that is cost unit. Okay. Cost center. Whereas lowermost level is cost unit. Below cost unit, companies doesn't, okay, accumulate costs. Now cost driver. What is cost driver? Okay. Now what is CIMA? CIMA, you know? Okay, it is the Chartered Institute of Management Accountants, London. Okay, so it's whatever is our institute, CMA Institute here. Okay, ICA. Same is Chartered CIMA for London. Okay, but it is the path bearer for all uh, management bodies. Okay, so basically, our management institutes like India's ICAI. Okay, for various countries. So CIMA is seen as the top institute. Okay, we follow many definitions and many things of theirs. CIMA London. Okay, so CIMA terminology defines cost driver as factor influencing the level of cost. Okay, factor influencing the level of cost, often in the context of ABC. Okay, there is a ABC is called as uh, always better control. Okay, so this is one way of classification, okay, of cost. Always better control. So basically, not classification, we'll say it is a way of displaying cost, okay, where you can where you show the uh, most costliest items together, medium level items together, lower level items together, like that. Okay, so maybe later on we will pick it up with some other chapter. Okay, so here, so the cost driver means, as the name suggests, cost driver. If you are seeing, say, I'm saying cost of one laptop is 50,000. What are the cost drivers and what are the main items of cost which are making this 50,000? Those will be called as cost drivers. So I will say whatever is the main thing, whatever body, say okay, body this much and battery. Okay. So, however, I mean, this is 2000, this is batteries, whatever are the main things, okay, that are called as cost drivers, okay, factors influencing the level of cost, okay, used in the context of ABC to denote the factor which links activity resource consumption, okay, which links activity resource consumption to produce output. For example, the number of purchase order would be cost driver for a procurement cost. Okay, so one procurement cost, say if you are procuring something, okay, then you will say procure it on the base on certain number of purchase orders. Okay, there will be, say, let us say 40 purchase orders in one procurement cost. Okay, so purchase orders will be a cost driver. For example, you are giving some services, let us say. Okay, we are giving some services and our customers are taking services. Okay, so how much service you have made, what are the driver for the services given, that will be given as purchase orders, 40 POs. Okay, 40 POs is, if I have got 40 POs, then these 40 POs are the drivers for my cost. Whatever cost I have spent, whatever cost I have spent for these 40 purchase orders. Okay, so there should be no cost which has been spent apart from these 40 purchase orders. That is basically the concept of cost drivers. Okay, which means that whatever you are selling, okay, your cost should be basically for that, okay, and not for anything else. So these things which you have sold, purchase order is what in the end you will get money for. Okay, purchase order is what? The purchase order for your customers basically, okay, is what you will get money for. So that becomes your cost drivers. Okay, it's just a term which is used in certain things. Okay, it is called as cost drivers. Okay, So, for example, number of purchase orders would be a cost driver for procurement cost. Cost driver is an activity responsible for cost incurrence. Okay, activity is responsible for cost incurrence. What is the activity for which you have incurred cost? That is what you will be seeing. Okay, an activity may be an event, unit of work, etc. Okay, any activity. So basically, why this is seen is, hello, you all can hear me, right?
Yes, sir.
Yeah, okay. So, okay, so cost driver, so why this is used, basically this idea of cost driver, okay, is just to make sure that you are incurring the cost only for your revenue producing activities. Any other, if you have any other cost driver, okay, which is not resulting in revenue, that will be then cut off. Okay, to identify that, this is used. Okay, cost driver. Okay, so examples are number of machine setups, number of purchase orders, hours spent on product inspection. Okay, hours spent on product inspection, number of tests performed. Okay, so normally cost drivers, as you can see here, hours spent on product inspection, number of tests performed. Okay, all these things. So this tells you that it is more used in services. Okay, to make sure that time is properly used. Okay, time is aptly used, which is why this cost driver concept is used. So this, your usage of cost driver will be only limited to one short note. So that's what you need to know. Okay, other than that, you will not refer to cost objects too much. Okay, now last thing, cost center. After this, we'll finish. So cost center is a location, a person, or an item of equipment, or a group of them in or connected with an undertaking. Okay, in relation to which costs are ascertained and used for cost control. The cost center can be anything. It can be one person can be a cost center. Okay, one whole unit can be a cost center. Okay, so it depends upon for whom you want to collect the cost. Okay, so you will only demarcate to the extent you want to study it. Okay, so that is cost center. The definition is location, person, or item of equipment, okay, connected with an undertaking in relation to which costs are ascertained and used for cost control. Cost centers are very helpful for periodical comparison and control of costs. Okay, they are helpful for periodical comparison and control of cost, because you have collected the cost for one cost center, you can see where you can reduce, right? And you will demarcate to that extent as much control as you want. Manager of cost center is held responsible for control of his cost center. Selection of suitable cost centers or cost units depends upon factors such as how to select a cost center. Depends on your factory organization, condition of incidence of cost, availability of information, okay, requirement of costing management policy. So it will be based on your requirement. Okay, how much detailing you want, based on that you will keep cost centers. Cost centers will be production cost centers, operating cost centers, or process cost centers. Okay, so all these chapters you will have operating costing and process costing, Okay, it will be there in methods of costing. Okay, so that time we will go through these things. It can be production cost centers, operating cost centers, or process cost centers, even job cost centers. Okay, whichever is the type, whichever is the method of costing used, it will be called as that cost center. Okay, so there are two main types of cost center: personal and impersonal. Personal means it will have a person or group of persons. Okay, impersonal means it will be an equipment or something which does not have any human being, so it will be called as impersonal cost center. Okay, this is the last thing we'll do. There are two main types of cost centers. Okay, production cost center, which are engaged in production work, engaged in converting raw material into finished products. Okay, any machine shop, welding shop, any production shop, all these things are production cost centers. Service is whatever is giving service. Okay, they render service to production cost centers. Example: plant maintenance, administration, etc. Okay, they just give service. Okay, so here we can end, I think. Okay, from responsibility center, we'll start next time. Okay, so this will be little on the boring side, this chapter. Okay, we have just information. Next one lecture, uh, next lecture we'll complete this chapter. Okay, after that we'll start marginal costing, which will be very interesting. Okay, so thank you. Okay, so we'll meet up later.
Thank you, sir.